Hello everybody, and so today I want to move beyond some of my usual stocks on the channel and talk about 4 other stocks that I'm currently betting on, 4 other stocks that I like very much. Let's begin with LifeMD. So as you know, I track pretty closely the HIMSS to LifeMD pair. I consider LifeMD to be a mini HIMSS, especially now that LifeMD launched its own pharmacy and LifeMD is now fulfilling a lot of the medications that they prescribe. LifeMD is a mini HIMSS that has a few differences. One difference is that it tries to use insurance to get you to qualify for all sorts of different drugs, including GLP-1. Not sure that strategy is working. Last quarter at LifeMD was not a good one. That strategy did not seem to work. Insurance just doesn't want to pay for GLP-1. But LifeMD is distinguished from HIMSS in that they try to use a little bit of insurance. Another distinction of LifeMD is that LifeMD, the company, is about 70% the healthcare business, LifeMD.com, but it's about 30% of this WorkSimpli software business, which has nothing to do with LifeMD, a company that they must sell. As I've said before, this company for revenue growth would actually be much higher if they still didn't have the software business. But they have a software business that is not growing fast at all, that is making their top line growth numbers not look as good. If you were to remove the WorkSimpli business from LifeMD, which they're trying to do, which they eventually will unload. If you were to do that, LifeMD would be growing at the same speed roughly at HIMSS. And in that case, it would look even cheaper. It would look maybe a 0.02, maybe something as cheap as that, maybe 0.03. Anyways, looking at this ratio, whenever I see LifeMD on EV over GP over RG, whenever I see LifeMD being more than 3 times cheaper than HIMSS, I'm interested, and this time we are nearly four times, right? Nearly 4 times cheaper than HIMSS. So right now, I consider LifeMD a better buy, especially in light of the fact that HIMSS has had a little bit of squeezing going on. We've had kind of a short squeeze, right, on HIMSS. We haven't seen any of that on LifeMD. I like to buy stocks when they are ignored. I like to buy stocks when nobody's following them. And to me, this is a good time to LifeMD. No financial advice, of course, ever on this channel. It's just what I do. Another stock that I've liked for a little while and that I like much more now, it is CorMedix. Now, CorMedix has one issue is that it's a medication, a drug that they sell multiple ones, but the biggest one is a solution lock. So it's a fluid sold in a vial, and it's a fluid sold in a vial that you put in hemodialysis settings. After dialysis is done, you put that vial in there, you put that solution in there, and it is there to reduce the risk of infections, because when you have an infection with a catheter, you go to the hospital and oftentimes you don't make it oftentimes. And so it's an anti-infection solution, right? It's a sanitary solution. And you may say, why do I like that? Because it saves money to Medicare and Medicaid. That's why I like it. It's a product that saves money to Medicaid and Medicare. It's not a product that Medicare and Medicaid have an incentive to try to entirely eliminate, because this product actually saves them money. It makes it very special. It also helps that DefenCath is about $250. That price might come down in the future too, but right now it's about $250 for each of these vials. I think when I look at Medicare, in my view, they are going after the drugs that cost tens of thousands of dollars. They are not kind of going after the drugs that are hundreds of dollars. And so they're getting through the cracks. They're saving money. They're saving money to Medicare, which is why I'm comfortable with that business. And of course, there's a lot of great businesses. There's a lot of great drugs out there, but so few of them are cheap. This one I like because it is cheap. In other words, I find the business interesting, but if it was trading at a 0.3 on EV over GP over RG, I would not be interested, right? I'm interested because it's trading 6 to 7 times cheaper than a 0.3. It's trading more than 10 times cheaper than what I would usually consider cheap on this spreadsheet. As you'll see in a second, I'll speak about Celsius in a second. Celsius is 10 times more expensive than CorMedix. CorMedix is a business that is misunderstood. They did an acquisition. I personally really liked that acquisition that they did. I tend to like small acquisitions. I tend to not like large acquisitions. I think they have synergies. I think this is a good acquisition. But the market got spooked because they had to issue new shares for the acquisition. And so that dropped the stock price of CorMedix when they issued these new shares. That was point number one. And then point number two, they announced an acquisition. The market, the algos, they hear acquisition, they hear acquisitions bad, and they sell this off. But this is a company that has synergies. A lot of these products are antifungals or antibacterial, so it's like an anti-infection company. So they have synergies in there. And the main product, DefenCath, which was the original reason why I invested in this business, they also have a lot of potential. There's only two large dialysis organization in the US, very, very large one. There's two of them, right? Fresnicius and DaVita, and they estimate they have about 60% of the entire market. And the second large dialysis organization is ramping up very fast. So the DefenCath revenue should grow in Q3 and Q4 quite a bit. And that solution can be expanded to TPNs. So TPNs are feeding tubes, right? Feeding machines. Whenever you go to the hospital treatment for whatever, you have a catheter placed to get fed, to have nutrition. And same, when you're not getting nutrition via the TPN, oftentimes they leave the catheters, and putting this in there would also reduce infections and infection risks. That's a potential very big market as well, because TPN are really, really large, although not as large as dialysis, hemodialysis catheter, but still pretty darn large from what I understand. So I like the business. Fundamentally, the business is fine. I like it, but what I love is the valuation. So that's why I like CorMedix right now. I love that valuation, and the stock price is nowhere near all-time highs, which is what I like. Moving to another stock which is nowhere near all-time high, it's Celsius Holdings. We had a bit of a sell-off the past few weeks in Celsius, and I've been happy to see that. Celsius actually traded higher for a good part of 2024. It traded higher. You may remember him being in the 90s and the 80s range for a few months. But this stock, back then was not as good of a stock as it is today. Today, Celsius is a much better stock, because today Celsius purchased its competitor Alani. Right, Celsius is kind of this gender-neutral energy drink. Alani is 90% women, so it's a very women-centric energy drink. What you had a few years back when Celsius was competing against Alani is you would see a lot of the sales of Celsius would be reduced because women would switch to Alani. Now I find that they own the entire market. They essentially own the female energy drink market, and they own kind of the gender-neutral energy drink market, right? And if you look at that market, Red Bull and Monster, all they do is very, extreme sports, very man-centric energy drinks. Monster and Celsius are also very sporting activity, like intense sporting activity kind of energy drink. These you don't necessarily find as well. These also, I find that a lot of people may see them as a replacement for coffee, and they also have kind of, your standard of the modern DNA of a company founded in the 2010s, which is you gotta make the product friendly for social media, you gotta make the flavor interesting for social media, and you also have to switch them up all the time, always, right? The taste of Red Bull is kind of always the same taste of Red Bull, right? Celsius doesn't have that problem. It's got a whole bunch of tastes, and depending on the trends of the youth, they can change the tastes. That's why, they have these names like Peach Vibe, Playa Vibe. Vibe is also a very Gen Z word. They are very aligned, I think, with the trends of today. Another thing different from when the stock was trading in the 90s is the international sales. The international sales are doing better, as you can see, and the sales have picked up quite a bit, and they are still number 3. They are still number 3 energy drink out there, right behind Monster. Still a little bit of ways to get to Monster, but in my view, they have a shot at doing that. And if I look at the performance of Celsius, actually in recent years, Celsius has outperformed Monster and has outperformed the Nasdaq. Monster has actually performed in line with the Nasdaq. Monster is one of these stocks who has performed better than the rest for a long time. I think Celsius may actually take over. And, all you need to do is to go to a gas station in the US to find out how popular these drinks are. You see these signs on gas stations. Go to Target. But I was at Target the other day. I could not believe the aisle, the number of Celsius and Alani drinks in that aisle. And some of these flavors were picked out, right? Some of these flavors were gone. So anyways, if I look at the valuation, it's the most expensive stock that I'm going to talk about today out of the four. It's a 0.46. It is a little more expensive, but it's also a bigger company, and it's also a company in a sector that has a tradition of outperformance. Coca-Cola, Pepsi, Monster, Red Bull is a private company, but if you add the numbers for Red Bull, I'm sure Red Bull would be in there. These companies have a history of outperformance. And so I find that Celsius is kind of in the sweet spot. And I also like that Celsius is really not correlated with much. It's not really correlated with anything. I mean, it's not really correlated with macro. It's, if you buy it in large quantities, it's like $1 can. But even if you buy it at the cash register, it's a $2 can. So it's kind of got like a recession-resistant component. You got caffeine in there. Caffeine is of course highly addictive. So there's a lot of repeat sales. In the early days of me following Celsius, people were complaining, saying that it had 200 milligrams of caffeine, getting people hooked on caffeine. Well, you know what? That's the story. That's the story of the world, right? I mean, it's just, yeah, people keep coming back for caffeine, and that's good for business. But as you know, if you sell sugar, it's the same thing. If you sell a sugary beverage, they keep coming back for that Coke, and so it's also good for business. I believe in freedom. I don't have a problem with Celsius having high caffeine. But anyways, I find this business in a great sweet spot. And stock number 4 I want to talk about today, and I don't have much to add to this one besides my one analysis. Look at my one analysis that I did a few months back on the channel. Full analysis is REAX, the real deal, the Real Brokerage. Is REAX, is the name of the company, for Real Brokerage. And of course, right now everybody talks about Open Door. Open Door went from $1 to $9 in a few months. To me, that's chasing. To me, that's way too fast. To me, that's a lot of hype. And I saw the little news on Open Door. Yeah, they got a new CEO. That's amazing. I wish they had given me back in the day when Eric Wu left. Anyways, yeah, that's amazing. Open Door was such an innovative company, and a CFO ruined it. There's no other way to say it. I mean, it's like they acted rent-seeking. I used to be such a fan of Open Door, and then they started moving into like lowball offers and offering people nothing for their homes. And then, of course, people were surprised that the revenue would crash like that. Open Door used to be a very innovative company. I don't know if they'll make a comeback. I really don't know. I still think the Fed has mostly killed Open Door, but I would argue that, yeah, Open Door is due for another analysis from me. The stock that my real estate bet, as you know, I believe real estate will be disrupted. There will be disruption to the mom and pop broker. The mom and pop broker in your hometown, your Keller Williams, your Century 21, your, Howard Anna, whatever you want to call it, they will be disrupted at one point. It makes no sense to have all of these disparate small offices with a bunch of politics and a bunch of like cliques depending on neighborhood and the realtors near each other and all of that. To me, at one point, that's going to be disrupted. And back in the day, I thought Open Door would be disrupting that. Now my bet is kind of on REAX. REAX is just like HIMSS is stealing the bread and butter from traditional insurance companies and mom and pop doctors. HIMSS is doing that. REAX is kind of taking the top performing agents, those amazing salespeople, those amazing agents. It's attracting them away from legacy mom and pop broker. How is it attracting them? It's attracting them by giving them a much bigger commission with a cap. after which you don't even have to pay a commission back to REAX again, besides some fees. So very interesting in the fee structure. Very interesting in the way of, it's not about spending the marketing. It's about attracting people by paying them more and letting them keep the most of their commission. And they've been doing so well because of that. The revenue growth has been stunning. Agent count has been stunning. So has adjusted EBITDA. So has transactions on their platform. As a whole, for the whole country, transactions are so down. They are very much down, but not at REAX because they keep growing organically and taking these agents under their wing. And REAX is a full stack, vertically integrated business. They're getting into the mortgages, they're getting into the finance, they're getting into handling the banking for the realtors. They provide realtors with their own apps. I find it very compelling. So that's my bet in the sector. And I like that for a company like REAX, I can calculate an EV over GP over RG. This is not something that I would necessarily be able to do for a company like Opendoor or be able to do for a company like, all of my strategy, MetaPlanet, all of my Bitcoin companies. I can't really, I just can't. I can't calculate EV over GP over RG. For REAX, I can calculate that easily because it's predictable. Everything is so predictable. And yeah, of course, the margins suck, but that's the nature of this business. This business doesn't have very good margins, but the revenue is through the roof. So anyways, the stock has been not doing much, for the past 3 years. And I think if real estate recovers, we could see the stock do very well. EV over GP over RG is a 0.14. So this is the third cheapest company that I covered today. Still much cheaper than Celsius, more expensive than a LifeMD or a CorMedix. So these are kind of like 4 stocks that I like. They're cheap and they're fast growing, and that's why I like them. So anyways, this was not investment advice, not financial advice. This is just entertainment on this channel. I am an entertainer. Please please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.